pesos. Joining us to weigh in, ATR Asset Management Trust Corporation's Jose Miguel Liboro. Hi, Jose Miguel. Thank you so much for joining us this morning.
Hi, morning, Mimi. Thanks for having me.
All right. Just very quickly, I just wanted to give an update on the numbers. The PSEI widening those losses down by 0.25% now. 16 points. We're at 65.83. Where do you see this market going? I mean, yesterday we were up, outperforming everybody else. My original question was supposed to be, is the market finally rising for all the right reasons? Well, now we're down again. Are we falling for the right reasons?
I think from a magnitude standpoint, you'll see that the swings have been a bit more muted. So I think the trend is that we hope that the market's going to be moving up, but it's likely to kind of consolidate in this range for a while longer. I think as we're seeing earnings results come out, fundamentals are going to show that they remain strong. But unfortunately, as a smaller economy, in the context of the greater global economy, we are still dependent on broad risk-on, risk-off sentiment. And I feel a lot of the movement is going to depend on whether there is a sustained recovery in the U.S.
Mm-hmm. And, you know, in the U.S., everyone's starting to, well, the Fed itself has mentioned that they're looking at a mild recession later this year. Here in the Philippines, well, inflation may be trending lower. We're 2 months already of deceleration, but it's still, you know, uncomfortably and significantly higher than the BSP's target. And we know that growth here, while will be still fastest in the region, will slow down this year. Are fund managers, is your group starting to even talk about the S word, stagflation? Do you think that's been priced in this kind of market at 6,500?
Priced in, I don't think so. I guess it's always possible, but to your point, I think based on the information we have right now, it's rather unlikely. Inflation has shown signs, as you highlighted, of decelerating. And while that's not going to lead into deflation, which is the lowering of prices, it is showing signs of disinflation, which is deceleration in the rate of increase. So we do think that that's going to persist throughout the year. From a headline basis, we do believe inflation should be heading or trending consistently lower throughout the year. And while we aren't yet back within the BSP's 2 to 4% range, as you noted, we do expect to be there by perhaps the first quarter of next year and very close to it by the end of the year. Mm-hmm. So given that, with still above average growth, as you noted, one of the best in the region, at this point in time, no real reason for us to expect the risk of stagflation, I think.
Okay, that's a positive view there. Very quickly, you know, yesterday we were the star performer of the region. Everybody was mostly up, if you look at the most actively traded stocks, except for telcos. You've got Globe down 3.4% yesterday. It's a heavyweight. PLDT, another heavyweight, down 2.7%. And the only reason we can think of is the SIM card registration. If it's status quo and no deadline is given by the government, that's if, and you've got over 80 million still unregistered SIM cards poised to be deactivated, what will that mean for the telco giants and the e-wallets they run?
Sure. Well, I think to put some context to it, the telcos have been sliding a bit throughout the year, especially from the highs hit back in 2021. And it's really a combination of slowing pickup on broadband from those highs and even inflationary impacts on mobile revenues, which in the lower income segments have been affected negatively. With that said, I think you're absolutely right that the recent price action is largely due to the potential risk of a non-extension of tomorrow's deadline.
Mm-hmm. What is a non-extension? How do you imagine it will play out for these telcos? I mean, if I'm Globe and I have, 30 million SIMs that will be deactivated, I mean, help us visualize how that impacts Globe. There's the challenge again of selling new SIM cards to these who will get their SIMs deactivated, start them up again. How does that work out?
I think at this, judging from the news flow, your own news flow, the DICT is currently meeting today with the president on seeing whether or not the final decision will be an extension. I believe the original provision did allow for an extension up to 150 days. So maybe a coin toss at this point, but we'll know at the end of the day whether that's possible. To your point, if the scenario does play out that it is not extended, then difficult to see at this point in time what the exact impact will be, but it certainly won't be pretty from a price action standpoint. We would expect there to be a further slide on the stock prices, at least over the short term, as analysts kind of scramble to see what the actual impact might be. At this point, I really would prefer not to hazard a guess.
All right. But I'm just imagining those with e-wallets who haven't registered their SIM cards. Good luck. I mean, that e-wallet will get deactivated together with the number. We're just going to have to wait and see. Everybody's hoping for that last minute, that 11th hour deal extension. This morning, we also got blockbuster numbers from Union Bank on a roll. It seems like the banking sector. You've got BDO, BPI, and now Union Bank posting a 30% jump in profit for the first quarter of this year. For how long do you think can these banks be reporting numbers as strong as this?
I think banks, financials in general, have been the obvious and the correct trade throughout 2022. Throughout the pandemic, after the initial extreme risk-off sentiment, they were the obvious gainers. Trading incomes growing as rates moved lower, and then conversely, when rates started rebounding, net interest margins kind of widening for the banks, so very good for the profitability. We are still quite positive on the banks moving forward in this environment, especially on the back of continued expected economic recovery and kind of back to business as usual hope or sentiment. But it is the crowded trade, as you mentioned. So we do continue to expect banks to perform positively, but maybe not as aggressively as they have over the last couple of years.
All right. We also have this, Justin. Philinvest Land President Tristan Las Marias has been named CEO in a meeting held yesterday. Mrs. Josephine Gotianon-Yap, who was President and CEO of FTC, has held the position for FLI CEO for 11 years, has now passed on the torch, fully confident of Las Marias' ability to continue the legacy and mission of FTC's real estate subsidiary. Of course, Las Marias is a 27-year veteran of Philinvest Land. Just very quickly, the property sector. I mean, rates have been good for banks. Rates have been terrible for the property sector. Do you expect them, though, to start showing improvements by this year?
Yeah, I mean, as you pointed out, property has been a bit of a laggard over the period. We do fully expect by the latter half of the year this segment to catch up. In line with the view I gave on inflation, we think rates will be heading down as well, and that will be positive for the property sector. On breaking it down into segments, of course, mall operators have benefited the most from the recent environment and the recent reopening theme. But on the residential area, we've seen some level of recovery. We expect this to continue to pick up. Maybe office rentals is where there might be a little bit more of a lag, but we do expect that maybe to pick up by the early part of next year as well.
All right. We've come to the most exciting part of the conversation. There's no blind item, but it's a big week for the Fund Managers Association of the Philippines, FMAP. Just very quickly, if you could walk us through some of the advocacies that you guys are working on, what are some of the hot button issues that you're still trying to sort through at this point?
Sure. Yeah, thanks for that, Mimi. Well, right now, and I apologize if this seems like a very esoteric topic, one of the things we've been working on is the inclusion of non-bank financial institutions into the already operating GS repo market. So I know that sounds like very highbrow, but
laymanize it for us.
What it does is it essentially allows participants access to another funding channel if they need it, but it also is one of the building blocks of allowing sophisticated market participants to potentially express a view on interest rates going higher. So just one of the things that we're working on right now, I think that one of the, hallmarks of a fully developed economy is the ability to express both a positive and a negative view in both rates and the stock market. And those are the types of building blocks that we're happy to work with other organizations and the regulators with on being able to participate in.
All right. You guys are very busy. We're looking forward to more updates from these advocacies. Jose Miguel Liboro, thank you so much for joining us today.
Thank you, Mimi.
Okay, now time.